Hello everybody, this is Vincent Chen video and welcome today. We have a very fortunate to interview one of my best friends, Wang, and he is a real estate mortgage broker, especially in the commercial area. And he has 13 years of experience here. And now we are really thank you. He has such a time and to join us. So Wang, since you're in the business for a long time already, what do you think this COVID-19 impact to our real estate, especially in the commercial area?
Sure, thanks, Vincent. First of all, I just really want to appreciate you extending the invite. It's a great honor to be here. Sharing some of the experiences that I have. Real quick, just wanted to emphasize that we're a publicly traded bank with Mission Valley Bank. We do work with brokers and direct lenders and such. So to answer your question, in the commercial real estate space, honestly, what I've observed is just broken down into different segments. In this environment, I think the priority is to manage with the local guidelines and to stay in business. That's one of the best things, because when in any sort of act of God, right? When we're reviewing that from a finance perspective, it's hard to basically evaluate and customize to that. My best suggestion is to comply with your local municipality and guidance on the rules of operation and stay in business. Currently, there are a lot of resources through the PPP as well as the SBA EIDL program. Those are great resources that a lot of our small business and business owners should open to access. One last thing that I want to emphasize around just managing through the pandemic is fortunately and unfortunately, Monday is the deadline for the Main Street lending program. That's one of the huge.
Really? Okay.
That's one of the huge programs that the Treasury Department had rolled out. However, there are talks. That's not official yet, but there are some funding left over with the federal government that they're looking to extend that. And with the Main Street lending program, I encourage everyone to Google and look into that and to find the best resource that you can, and talk to your bank and ask for a guidance on how to apply for that, because that's an additional resource to the PPP, to the EIDL.
Perfect. Okay, let's say if I'm an investor or commercial, try to buy some commercial property. So, can you give me a little idea? This is a good time to buy. Should I be aggressive to buy, or I should be very conservative?
Sure.
What do you think?
So, obviously, real estate is real, right? That's one of the most tangible asset, or amongst one of the most tangible assets that's common to everyone. As far as timing goes, there are multiple variations and variables that come into play. Honestly, you have to look at what's drive that. So for investors, right? Are you planning to, if your driver is to separate and exercise some of your capital, like if you have a lot of cash vehicles and you want to divert some of that, those risk profiles from other investments into real estate, obviously, depending on the type of real estate, I think in Southern California or in the United States in general, there are plenty of opportunities. However, if you're planning to leverage your capital and to borrow money and leverage like lenders and etc. to invest into real estate, I think this is a great environment, because we're witnessing one of historically the lowest interest rate environment.
That's true.
There are multiple approaches to that, right? Vincent, if you, for instance, if yourself wants to, move into a location, or you want to purchase a location for your office use, that would be considered owner user. And right now, SBA has historically the lowest rate this month at 2.55%.
Wow.
Fixed. for a very long period of time.
25 years?
Correct.
Wow.
Outside of that, right? Many of the industries that we come across with in the retail industry, like our medical professionals, chiropractors, veterinarians, all those industries, professionals, small business owners. If you have a need currently where your lease is coming due, or you're experiencing rent increases, and you've been shopping for a long time, and there's a need for a permanent location, it's definitely a good time because the rates are extremely low.
Good, perfect. Now, how about, let's say if I have a cash, should I buy the warehouse to invest, or should I buy the shopping center? Because of pandemic stuff, I heard about the warehouse is a very high demand, and then office building is kind of going down. What do you think about that?
That's a great question, Vincent. Usually when a client comes directly to me, and my first feedback is, who is your most experienced real estate agent, and I would direct that to you.
Thank you.
Because you're the only name I should know in real estate.
Thank you.
But outside of that, right? On a serious note, if we're looking at evaluation on different type of real estate, so I'll give you the prime example. When we're investing into a real estate, you want to look at who is the tenant.
Okay.
Right. It's just like when you invest into businesses,
Yes.
You look at the owner.
Perfect.
Right?
Yes.
So in that sense, right, you really want to know, like, if you're trying to purchase a warehouse with cash, your biggest concern is how do you get your money back? Who's your tenant, right? How long has that tenant been around, and etc. I think in the retail space and the warehouse space are a little bit different, segmented. If you're looking into a warehouse for investment, from a lending perspective, I can share with you what we look at is the net operating income, right? So for due diligence, you definitely want to talk to the seller and see like what type of income they've been generating. As far as retail goes, I would honestly think in this environment right now, some of the type of properties you'll find a great deal, but not guaranteed every occasion. Retail is one of them, because unfortunately we're seeing a lot of vacancies and etc. But as an investor, what are you planning for that? Right? Are you planning to acquire that real estate and continue to run it as retail? Then you fall back to the original concern. What is the net operating income, and who are the tenants occupying? What type of anchor you have, and etc. But bottom line, I think the primary source that you want to rely on is to have a really, really good real estate agent like yourself. And then when you have cash, or when you have capital, you can go into one type of negotiation, and then if you want to rely on bank to finance that, then we can strategize differently as well.
Perfect. So, this is the last question I think I have here. I know you're working on the mission residence right now, and of course you're working in the Treasury for 13 years. Can you tell us what is the specialized, or what do you think is the strong point you can help my audience?
Absolutely. So just quick recap. I think for most of my 12 years, historically, I have been in a $10 trillion bank, either between Bank of America Merrill Lynch or JP Morgan Chase. The significant difference with Mission Valley Bank, right? Our company's mission is that your success is our mission. We want to focus on the small business owners, etc. What sets us apart is, we will do all the SBA financing. Okay, we'll work with all the small business owners that are owner occupying. Some of the industries that other lenders might not focus on. We'll work with gas station owners, operators, etc. Right? Outside of that spectrum, if you have an investor that wants to just purchase the retail space and rent it out, we'll be able to finance that as well. In addition to that, we'll finance multifamily unit. So those are like five units plus apartment complexes.
Perfect.
And you know, again, like for someone that has a tremendous amount of years and experience like yourself, Vincent, I'm sure you came across a lot of phenomenal lenders and such. So your question might be, okay, so there's other lenders that are also lending to non-owner occupied space. What sets you apart? And what really differentiates us is like a lender might look at you know a type of a real estate for 50% loan to value ratio. With Mission Valley Bank, we are very open-minded and optimistic, working with our small business owners, and we may extend, and with a different risk appetite, we may extend maybe 60 or 70% loan to value ratio.
Wow.
And honestly, you know, with your experience, you understand that it's case by case, but I could rest assured that we will have a different approach, you know, to be more optimistic in that spectrum.
Wow. Now you know, if we have a commercial loan need to help, this is the person you should looking for. I can guarantee that. Well, thank you very much for all of you that come here today. This is Vincent Chen from Fairview Realty, and nice to see you again. And bye.